Tomorrow, two large Chinese companies complete their U.S. IPOs, stirring up plenty of interest with investors who are already calling them the Amazon and YouTubes of China. Joining us from Chicago is Jeff Papp. He's a senior analyst at Oberweis Asset Management and manager of the Chinese Growth Fund there. Jeff, thanks for joining us.
Sure, nice to be with you.
Well, your fund has 100% Chinese companies in it, correct?
That's correct.
All right, and we have several that are pricing this week. We talked about two tomorrow price. We have Dang and Youku. So Dangdang and Youku, I think I'm saying it right. They're both opening tomorrow. Tell me what your thoughts are about the two.
Well, obviously, given the parallels that people are going to draw between Dangdang.com and Youku to Amazon and YouTube respectively, they're going to do extremely well. Now, it all gets back to at what price do you pay for these companies and their future associated growth and cash flows, and there lies in the risk. Obviously, these companies are going to price above the range given the huge amount of demand for their shares, but then it becomes what's going to happen to them in the aftermarket. And we would expect that they're going to trade up maybe 50, 60, maybe even 100%, given how large the demand is. But at those prices, then it tends to be that the risk-reward profile shifts dramatically.
You know, your fund has done well this year. Talk to me about, do you typically get in at the IPO level or do you wait?
Yeah, we try to play a lot of Chinese IPOs, but again, it gets really back to the price and the valuation. So with these companies listing tomorrow, the price and valuation seems pretty fair, but then again, it depends on what's going to happen to them in the aftermarket. And what we've seen recently, and especially this year with some of the smaller deals, is it's very hard to get allocated shares on the IPO, given that some of the deal sizes are extremely small. And when you see larger institutions like the Fidelities or the Wellingtons of the world buy up the shares, smaller investors usually tend to get squeezed out. The day of their listing, then they tend to go up some 50, 60%, and at those prices, it really doesn't make sense to chase them.
I see. So it's almost easier to buy them in the secondary market. Quickly, there are two more companies that are going public this week. There's Bona Film Group, and I apologize if I'm butchering these names, and Sky Mobi. Those are on Wednesday and Thursday, respectively. Talk to me about those two companies. Are you as bullish on those two?
Yeah, there could be some interesting opportunities there, given that these two could maybe fall through the cracks as people are paying more attention to Dangdang and Youku. But Bona Films is a independent film distributor and trying to move upstream to produce its own film in China. And Sky Mobi is one of the leading application stores for mobile phones and application developments in China. So they do have some interesting opportunities there, but again, it really gets back to the price that you're going to pay. But something that we are watching now is seeing that if attention is really shifting to some of these larger overpriced IPOs, that some of these smaller ones may fall through the cracks and represent interesting opportunities for investors.
Let's talk about the future here. You know, Baidu.com, it has become a household name pretty much in the U.S. That company went public back in 2005, and since then there have been a slew of stocks, Chinese IPOs. Will this continue going into 2011, looking out at the next 5 years? Clearly the country, from an economic perspective, has a lot to deal with. We have inflation. They have real issues related to real estate prices, real estate bubble, some say, as well as food prices, really weighing on the local population there.
Yeah, I think it can continue, and the reason is that those markets over there are developing so fast. So what you're seeing right now is that there's an interesting combination of old industries growing pretty fast as things consolidate, but also new industries like the e-commerce ones that we're seeing right now that are just taking off. So those represent some interesting growth opportunities. And as it relates to things like Baidu and Sina.com and Sohu.com, those are some of the first Chinese companies to come list here in the States, and people weren't really receptive to them at the beginning, but as they've proven themselves and the consistency has proven themselves, they've been awarded very, very rich valuations, and that's why you see more and more companies try to come to list here to try and be like the Baidus and the Sinas.com of the world to get that high valuation. What
companies do you think are particularly susceptible to inflation right now, or are overvalued?
Well, I think almost every one of the recent IPOs that we talk about is susceptible to inflation, and I'll tell you why. They're all growth stories, right? So when you talk about growth, they have plans to continue to grow in the future, but it depends on at what cost that growth comes at. So what we're seeing right now is if you have a retail store in China and you're trying to roll out, double your store count, you're going to pay more for, number one, rent, as well as all your supplies and especially labor. So inflation is a big concern in China, especially as it relates to these companies that are going to be trading at extremely high valuations where maybe some risk of execution on that potential growth isn't incorporated yet into the valuation. So there is a lot of risk from what inflation from a cost perspective can mean for these companies.
All right, Jeff, certainly a topic we will continue to talk about. Thank you so much for joining us. That was Jeffrey Papp, Senior Analyst at Oberweis Asset Management, live from Chicago. We'll